Hello and welcome back to the iGold Advisor channel. This is your editor, Christopher Aaron. It will be December 23rd, 2021 by the time you see this. And in this broadcast, let us update the gold and silver mining sector. This is a very important sector. I know we have a lot of mining investors out there. And also, if you are simply going to stack the physical metals, you should pay attention to what's happening in the mining sector because the two parts of the spectrum are sometimes reflective of one another. So it's important to pay attention to what is going on there. This will be our last broadcast for the year. The next one will be about 2 weeks from now after we get past New Year's. So I want to close it out with what we are seeing here. It is very important to be following this sector. Welcome. I'm glad to have you here. Make sure you hit the red subscribe button and the bell icon so you'll know when these videos are coming out. And also, if you're on Twitter, make sure to follow us on iGlobalGold because sometimes I don't have a chance to post a video update for several weeks, but I will oftentimes get quick updates out on Twitter sometimes in the middle of the week. So that's all for free. Let's get into the mining sector as we look at our legal disclaimer here for one moment. Okay, so here it is. Now, I like to call this is the GDX, and although in the official name for the fund, it is called the VanEck Vectors Gold Miners ETF, I have put and silver in there because this fund has approximately a 20% exposure to the silver miners as well. So this is not merely a gold fund. This is both gold and silver, and as you know, they both tend to move in the same direction. So we're looking at really a representative of the entire large cap mining sector. Now, we are looking from the coronavirus lows in 2020 through the present. And what I want to do is look at the major trends that are developing here in just the last part of this chart. Basically, from the multi-year peak up here around the 46 level. Sorry, I know the top of this legend got cut off here. But we went up to 46 at the peak in 2020 to where we are right now, closing at 31.16. Is this consolidation and correction going to go on forever, or are there signs that a bottom may be close? So what I want to do is not so much focus on the shorter term trends which are already broken. For example, you can see this trend very clearly matching the major swing peaks here for the first 6 months or so of the decline. That trend has already been broken, and you can notice that we're still staying on top of the broken trend even though it's continued to grind a bit lower. So I don't want to focus on that. Same thing with this most recent broken trend. I don't want to focus on that so much. What I want to do is focus on the bigger picture trends here in the mining sector. So take a look at this. When we talk about not the shorter term trends, but let's look at the trend with the multi-month peaks. And here is where you have to understand what we are doing a little bit here. So clearly we have from the most recent high at 46, clearly this was a rejection right here just below the 34 level, right? Now here's where you can say, well, Chris, you haven't drawn your trend line correctly because look, it doesn't hit this exactly. What I'm telling you, ladies and gentlemen, is this is based on 15 years of studying not only the precious metals market, but many commodity markets, many individual stocks, currencies, bonds, what have you. When you see something where the third data point lining up on a trend clearly was respected, so this was respected, this was the start of the trend back here, and then you look at this middle data point and you look at it and you say, well, yeah, we kind of flirted with this here. You know, there was a rejection here, a hairline close above this trend, but then look at this. A rejection again 2 weeks after that first rejection, and so then you failed completely. So the thing about charting when we're talking about the gold and silver miners is that this data point in here since it comes so close to the first and the last data point, and since the behavior of the market here, look, if we had seen this break out and upward and continue upward, right, and then make a new all-time high sometime later this year, clearly we could say that there was not a valid trend there. But when you see this, where look, there was a rejection the first week, second week, nothing impulsive, nothing decisive, just a hairline little close above the trend, and then the third week, clearly another rejection. Look, guys, this entire zone here was acting as resistance, and it is no coincidence that this lines up with that and with that. And so as a net sum here, we have a very clear year-and-a-half long major primary in the royal blue color primary resistance line that right now, if it were to be tested, would come in right here just below the 34 level, but it is declining in time. And so even though we have a couple hairline closes above that line, the message of the market, you're never looking for perfect data. If you're looking for perfect data, have fun scouring the earth till the end of your life, because it doesn't exist in any market on any time frame. What we have is a message of a market, which is featuring lower and lower major multi-month peaks on the primary trend. Okay, let's continue. Now, we start to connect the major multi-month lows. And you can see here, okay, two important lows, right? Now, what about these lows in here? Notice something. When we start to look at the lows here in September and this most recent one in early December, notice that the slope of these lows, I'm not making this up, you can see it. The slope of these lows was coming down basically at the same slope as the highs in the beginning, but now it's starting to taper. It's tapering, and look, you can see this one didn't even come all the way down to the line. One way or another, the lows are starting to taper with a higher slope, a less steep slope than these highs. And when you see the highs coming down in a more aggressive slope and the lows coming down in a less steep slope, this is the textbook definition of a terminal wedge pattern here. This is critical, guys. This is absolutely critical because we're talking about the sum of the knowledge of the gold and silver mining sector playing out over a 2.5 year time frame here. This is it. I mean, if we're right about this pattern here, this is going to manifest in ways that will set the wind at our backs when this thing resolves sometime this year coming up in 2022. Just wait till we see what is going to happen here. Now, in case you think I'm making this up, this pattern of this terminal wedge here where the highs are coming down at a more aggressive slope than the lows, look, here's the textbook definition. You can see it in red. You can find this in any textbook on technical analysis. It's called a wedge pattern, in this case a terminal wedge pattern. You can see the highs are coming down, the lows are also coming down, but a less steep slope. They also talk about the volume decreasing as the time goes on from the peak. So remember this wedge, let's get rid of that. Notice here how the volume has really been coming down as this is going on. I mean, we're getting some of the lowest volume here of the last 2 years. So this, I mean, if it looks like a duck and it quacks like a duck, there's a pretty good chance that it's a duck, or in this case, a terminal wedge. Now, a terminal wedge, as you saw in that textbook example, is a bottoming pattern. Bottoming pattern, guys. Gold and silver miners are bottoming. Now think about this for a second. We're seeing a bottoming pattern at exactly the same time that the sentiment is some of the worst sentiment that we've seen in at least 3 years, if not 5 years in the precious metals sector. Everywhere I turn, I am seeing people, investors, throwing in the towel. They're saying, I'm tired of this, it's getting old, I'm going to move over to whatever, Bitcoin, oil market, I'm going to chase NASDAQ stocks higher, fill in the blank. People are getting tired of it, exactly at the time that the textbook and our analysis shows that this is a perfect looking bottoming pattern. If you're a contrarian, which you must be a contrarian to be a precious metals investor, I challenge you to be a contrarian amongst contrarians. What I'm telling you is I think the majority of the investors in this sector have gotten tired of it. So you have to look at the bigger picture, which is what you're doing with us right here on this channel, because very few people are actually paying attention to the big, huge, important pattern that is shaping up right here. Now, the challenge in terminal wedges, based on my decade and a half of trading the markets, is that you cannot predict with 100% accuracy when the pattern is going to break to the upside. In bullish instances, these patterns will break to the upside sometime around 2/3 of the way through the pattern, which would be here within the next month or so, or about 2/3 from the very beginning through what would be the apex of this pattern. In less bullish instances, the pattern will need to grind its way, getting even closer to the apex, very rarely reaching the actual apex, perhaps somewhere around the 3/4 of the way mark, 3/4, 80% in this region, before these things, in most cases, break to the upside. So that would put us, if you look at the two highest probability scenarios here for the gold and silver miners, that would put us at a breakout here either, let's say, in January, or our worst case scenario is going to be late Q2, early Q3 of 2022. So, because in a terminal wedge pattern, one cannot pinpoint the exact moment that the breakout is going to happen, the best strategy with your capital that you have allocated to the gold and silver miners is to engage in a process of accumulation into the final part of the wedge, where you don't try to time every single purchase for the exact breakout, but you do a process of dollar cost averaging, let's say here, starting now, in case this was the exact bottom, but then you allocate enough capital that you still have some room to add to positions, let's say over the course of the next 6 months or so. This is a very good looking pattern. No patterns are 100%, but this is as good as we could ask for a bottom setting up. And once again, you just think about how bad the sentiment is. It basically makes perfect sense. What the gold and silver mining sector is going to do when it breaks out, it is going to take the least amount of investors possible with it. This is what markets try to do. They try to throw as many people off as possible, and then they have moves like this that give very little time for people to get on board. Everyone is thinking, oh, I'll have plenty of time, right? When the impulsive next wave happens, it does not give the majority of the people time to comfortably establish positions. So what we are doing here in our two services is to dollar cost average and to accumulate a basket of gold and silver miners now and over the course of the next several months. So if you want to do it on your own, you're free to go out and do the research and learn about the companies, learn about management, call management on the phone, make sure that they're staying on top of their business so you can be a well-informed investor. Or if you would like to subscribe to our service so we can do that work for you and you can just allocate the money, just know that these are the two services that we offer. We offer Precious Metals Intelligence, which features videos like you're seeing right now, features the exact open market buy and sell signals of the basket of gold and silver miners that we are investing in. And if you are an elite investor, if you are a higher net worth, I encourage you to check out our Elite Private Placements service. In this service, you get the opportunity to nearly double your upside as compared to open market gold and silver miners, because we buy these companies via private placements, which give us free, yes, I said it, that's right, free warrants with each investment that we make. And the warrants give you not exactly twice the upside, but almost twice the upside when you do the math. Elite Private Placements also includes a free subscription to Precious Metals Intelligence for as long as you remain a member. And just remember, the minimum to do a private placement is typically $10,000 in Canadian dollars, which right now is about $8,000 in US or about $6,500 in British pounds. So whichever way you want to go, guys, if you want to do the research yourself, if you want to follow these companies every week, make sure the news releases are still going in your favor, or if you want to join either one of our services, depending on whether you're sort of at the beginning or middle stages of your investment career, or if you have the capital to invest in the private placements, one way or another, you can see from the chart, we are in an accumulation window here that has anywhere from, I'm going to estimate, 1 to 6 more months left before it breaks to the upside. Most people, my observation is that most investors in the precious metals sector are doing the opposite right now of what they should be doing, which is they're selling most of their positions. They're selling it for tax loss reasons. They're just getting tired and they're moving to other markets. You got to be the contrarian within the contrarian. If everyone was doing this now in this grind, it would be easy. Everyone is not doing it. You are here for a reason. Make your own decision, but please make wise decisions based on data one way or another. I'm glad to have you here. If you would like to speak one-on-one, please know that you can reach me by voice and email consultations on the website when you want a researched, independent perspective. I do want to leave you with one message of a Merry Christmas to you and your family. And because this will be the last video of the year, I also want to wish you a happy end to your 2021 and a happy new year coming just a little over a week from now. Like I said, I will see you in 2022. This is an extremely exciting time to be an investor in these markets. The patterns could not look better at this point. Doesn't mean it's going to go straight higher. In fact, I would say we've got a nice little window here still ahead of us for accumulation. And then our best assessment is that breakout happens anywhere between January and the end of the first half of 2022. Thank you for tuning in. I'm glad to have you here with the iGold channel. I will see you soon.